Good morning and welcome to the New Look Morning Bell. My name is Raj Arya together with Martin Wong, the editor of TradersTruthReveal.com. Today is Trading Tuesday, October the 2nd, 2012, and looks like we got some interesting developments. Budget just took place last Friday, and now I would like to ask Martin on his opinion with regards to how the budget affected you. So what do you think of the budget from a professional investor's perspective and of course as a man on the street?
Actually, if you look from the budget standpoint, normally there's always be a run up to the budget. And then immediately after the budget, we see some tapering off. Those were the usual years. However, I think most of the reader would know we have a pending election, which actually I think everybody knows about it. The election has to be done sometime by next April 2013. So as such, this is a very populist budget. So a lot of goodies been out. You can see it on papers everywhere. So market continued to stabilize and even retesting the old high of the KLSC at 1655. And as of now, we are up already 6 points. Now bear in mind, we've been up the last 7 days and only of a recent sell-off. So that has been good from an investor standpoint. However, you would see volume is tapering off. There are a lot of goodies we will be talking about from here onwards. But from a market standpoint, I think this is very good because you still got a bit more leg to go higher as news of the general election 13 has not been announced.
All right. So as I mentioned just now, today is Trading Tuesday. We're going to talk more in terms of the financial markets, especially here in Bursa Malaysia. And what better way to start than the headlines making the news today? Muted market reaction, FBM KLCI marginally higher in response to market neutral budget. The impact of budget 2013 on the overall stock market was rather muted as expected, with some experts saying that the market direction will continue to possess low visibility prior to the general elections. I think that's what Martin has mentioned just now. Now, for the benefit of the viewers out there, we know a lot of goodies has been dished out, but end of the day, with every dollar being spent, it should in theory be matched by every dollar earned. However, Malaysia has been running a budget deficit for the last 15 years, and currently Malaysia's overall debt is approximately 502 billion ringgit, and I think that's 53% of GDP.
Yes, that's correct. Now, like it or not, every government in the world, no exception in it, we will continue to run into more national debts, okay? Because that's the whole policy of a government, is to enable the rakyat to enjoy all the benefits that we see in here. I mean, you look at US, you look at Japan, those national debts are really, really going high. And Malaysia is really a challenge to maintain the national debt to GDP just below 55%. As I know, we are at 53%. Now, if you think of it, a country like a corporation, the debt is just like taking up liability in order to purchase more assets. What is more important to be able to see revenue or sales growth in the same proportion with the national debt. So if you have growth in liability, then you have to have growth in sales. So what we are looking for is actually growth in revenue collections. So that has to match the growth in the national debt. As long as they both progress in the same way, we would see higher national debt.
All right. Okay, now something very interesting you mentioned. Debt in its own right is not necessarily a good thing, because as we can see from this chart here, Singapore, who we look in terms of very, prudent and conservative spending, progressive, developed nation and all that, their debt is about 100%, whereas Malaysia is about 53%. So can you explain that phenomenon?
Now remember, Singapore, a lot of these have been using a lot of their expenditure in infrastructure, okay? Whereas Malaysia, we are still parking below 55%. So Singapore has already built in, they have almost a full complete MRT system, and yet Malaysia is coming up. So don't forget, Singapore can be considered as a fully developed nation, and Malaysia, we are another 8 years to reach that. In order to reach that, we have to have at least a 6 6.5% GDP growth for the next 8 years to get to the Vision 2020, which is motored by our ex-Prime Minister Tun Dr. Mahathir. So we have to grow at 6.5. Now, what we have so far this year is only forecast, or IMF or the Bank of World Bank is only forecast about 5.2. So we have to continue to grow. In order to grow, we have to spend. Right, if that's the bottom line is. So I'm up for even breaking the 55 and going higher. If you need to grow to the Vision 2020, you have to have take up
but there's
more
a very fine line to draw there, isn't it? Because 55% of GDP is like that trigger point, like you're entering the red zone. And we know that the international, how do you say, credit rating agencies, they're watching Malaysia very, very closely in terms of potentially downgrading our sovereign debt.
That's right. So it's very important that now remember this also happened, I think, last year when the Standard & Poor downgraded US. The stock market went lower, but they downgraded to AAA, I think, and then subsequently the market recovered. I mean, this need to be done by whatever the rating agency, but bear in mind, market do recover. If you look in terms of the stock market that we have, that is above the 60% national debt to GDP. A lot of this market, including, let me see if I have that chart, Greece, except with the exception of Greece, let me just look at that. Germany, all this actually rally so much better than UK. They have rally. So what I'm trying to say is the national debt to GDP has not much play on the stock market. Okay, in the short term, this rating will affect it, but like it or not, governments need to inject spendings in it to get people to consume more. And when people consume more, you have the velocity of money flowing, and that's good for everybody.
Okay, right. Now, there are two things to differentiate, I guess. One is from Rakyat Malaysia's perspective, a citizen of Malaysia, and the other is as an investor. Now, as you say, markets obviously is somewhat independent on the macro level in terms of debt and so forth, because end of the day, if things turn for worse, they can always liquidate and move on to another market in a different country, in a different region, and that's the end of that. But if you're a citizen of Malaysia, then of course we don't want Malaysia to degenerate to, for example, where Greece is right now, where you have all this hardship, high unemployment. Now that's something we should be concerned about.
Now you have to differentiate between what's happening in Greece and in Malaysia. In Greece, I would say Greece is more of an entitlement society. You know, they went through the very bad. Well, if you look back at Greece, they have a bad war. They've been fighting the Turkish, you know, for the last 300-400 years, and so a lot of people went through a lot of hardship, right? So the country had progressed over the 1980s and so forth. Now, if you look back to Malaysia, in Malaysia, if you don't work, you're not going to get anything. That's it. And that's one thing great about Malaysia. Everyone work. So when people work, that will contribute, and people have to spend, and that will contribute to the growth. That's how I see it. So back to your question, you were saying that this difference between Greece and Malaysia. So to me, when people work, that's good. But when you have a central government that controls the spending and decide which party or which person can get more than the other person, and that's where wrong.
Right. Okay. Now let's say we always like to differentiate, for example, governments and corporations, a private limited company, for example. Now, let's say we have Malaysia Incorporated now. Malaysia is actually a company. We've been spending more than we've been earning in terms of revenue for the last 15 years. Our debts has now exploded to 500 billion. Until you rein it in, if you were a company, you are practically on the verge of bankruptcy if someone decides to turn off the tap, for example, your bankers or your creditors. So where would you draw the point? Because this is like a black hole. It keeps getting bigger and bigger and bigger.
It is.
Something has to give at the end of the day, wouldn't it?
Yeah, it is quite true. But if you look at, as long as countries are allowed to print, they will continue to go on. But however, in Malaysia, we have a very good governor, I think Tan Sri Zeti, who is, you know, in my opinion, is one of the best central bankers in the world, and who is very, very prudent with the spending. As a matter of fact, one of my student who attended our course happened to organize a function for the central bank, Bank Negara Malaysia, and the Tan Sri Zeti was saying that she'd rather not spend so much on the backdrop of the function, and if you could save some, and that's good. And to me, when a friend of mine who organized that told me about it, and I said, wow, this is a great lady. And here you have a central bank who is very prudent with the spending, and if you maybe have a our country will progress very well.
That's right. If only we had more people like her in the government and of course in the Malaysian private sector as well, then Malaysia will definitely flourish with that kind of
Precisely.
prudent and conservative mindset, you know. Okay, with regards to goodies and, you know, entitlement and all that, obviously this has been a very, very good budget in a sense. A lot of goodies. We have BRIM 2.0. Now the singles are included as well.
Yes.
We have the handphone subsidy of 200 ringgit. We have the Bantuan Buku once again for our students, university students and so forth. So it looks like a lot of money. It's going to flush the economy very, very soon right now.
Yes, yes. I think this is also part of the strategy used by the main national coalition to try to get more vote. And if I'm going to be running the government, I will do the same thing too. I think what's more important is subsequently what you do. A lot of things has been said about not to discuss about GST, but I believe GST will have to come in because all this spending has to pay for it. Someone has to pay for it. And I think there is a one point of time, and even remember this year we have the reduction of personal tax relief of 1%.
Right.
So that means there will be less for the government. So eventually GST will have to come in, and I think once they come in, you'll probably see an increase, progression rate of increase in GST.
Right. Okay, now they said with regards to the distribution of all these goodies, as I mentioned just now, it probably take a bit of time and they're looking at the early part of next year. So there's a lot of speculation. Logic will tell you that chances are the general elections will be called for just after that in order to take advantage of the euphoria which it created. So it looks like it's a safe bet that the GE won't be happening this year?
Again, remember all the dishing out take time, all these goodies going out. So there was a lot of talk about this year, but again, to feel the feel-good effect, I think it will take some time for it to proliferate to the rakyat. I think most likely it may be looking at next year. There are plenty of times.
Which month?
As I don't understand, it have to be before June.
That's right.
And it tend to coincide with school holidays.
Right. So that month would be...
Well, if I have to put a best guess, maybe March or April.
March or April. Okay, that's right. You heard it here on the Morning Bell. Martin Wong has mentioned that March or April looks like the likely date with regards to our 13th general election. So if you agree or disagree with Martin, well, please email us at updates@capitaltv.my or tweet us at the Capital TV. Now we're going to take a very, very short break. But when we come back, for all you investors out there who is looking at Bursa Malaysia right now, we're going to analyze all the various major industries which are affected by the budget and see which are the hot industries to go for and which are the industries you should avoid. So stay tuned right after this break.